Hey, it's Mack with PriceActionTradingSystem.com. And it is Thursday. It's January 26th. This is our chart lesson for the day. And this is going to wrap up our week. No chart lesson on Fridays. And the week went by really quick once again. Been a good week. Today's probably one of the slower days. The last couple of days, it's really been a nice trend. But you get more trades on a day like this in most cases. I tend to like these kind of days. So somebody else sent me an email earlier today and said they used to always wonder why I would say that. And they said the light finally went off and they kind of understand why they're starting to see it. And they understand why I like these kind of days now. So they're pretty predictable. You just pretty much have to buy the lows and sell the highs. And in this case, notice what's happening here. Notice how we're making lower highs and lower lows down through here. Even though this strong support's coming into play, we're having a hard time getting through it, and we finally get through it, and then we get right back in, and we push down, and we still spend 90% of the time within the range here. And this is a two-tiered range. This is actually your midline, and you can see it's just two perfect measured levels, and that's what you like to see. Really, I ended up moving this line up for trading purposes where we're looking to go short at that point. But later on, I moved it down. And you can tell that is the midpoint I just showed. You can see where you get more turns and more, it kind of prices work out really both sides of the line on it right there. So you can see that it kind of dropped down late in the afternoon. It was down another tick or so, really. It wasn't much. I think it's maybe one tick, maybe two. I think it's just one tick, though. Um, Actually, I think it's right here. So it's a couple of ticks, but you can see we got real close again on right at the close. So, but yeah, it looks like the critical pattern was the trading range, but notice how we're making these lower highs and lower lows once we started here. That's your only sign that we may go lower here. So um, it's important when you start to notice that. And people ask me, well, how do you know? Generally you don't want to go short right here, but we just went lower. We come back, we make a lower high. Notice how we made a lower high and lower low. This was really a double top here, but it still makes a lower low. And it's the same thing. So you're not making any higher highs at any point, and every time it goes lower, it makes a lower low. So that gives you a little bit of courage to go short here. And the way I would have handled this, this is really your higher point. I would have let it break below this bar and then maybe drop the limit order. And you see it did pull back, and you would have gotten filled at the same spot there before it went lower. So, and this one's borderline being green. You probably could argue for it to be green. It's just as easy, but I think if you recognize the lower highs and lower lows, and of course this trend line, and this is really when the trend line, it's real clear to get this trend line off the low swings right here, and it fit right here, but then you went high, came back into play again here and here, and then you pretty much know it's the real deal. So that's how you know that there's a possibility it's going lower, and you may want to take a chance on one of these trades here. So, uh, but since this did have kind of a downward bias, most of your trades were off the high side. There were actually more trades off the high side than the low side. Not a whole lot. I mean, there's three or four here off the low side. But let's back out and talk about the trades, and we'll wrap the week up and wrap the day up. And we'll be back again to it Monday. So, first trade I saw, this was real clear working down. You get a break here, and you get a chance to go short. It's not a great short. I went back and forth about whether or not to make this one green or not, but you're probably going to push down and make a new low. And this has been real tight, so there's not a lot of. This is one of those deals where you're not going to get a perfect second entry. You do get a second entry here, but it's right into the lows, and a double bottom. You don't have room, so and by sitting tight, then you catch the trap and can go long. At that point, I really thought it would go back to the high side, um, but it didn't. So, and let me back up here before I talk about these two trades again. Uh, it never fails. People ask me, how do you know if it's going to be a range day or a trend day? And you don't know, but what the clues, you just have clues or what I call tails. And, it's like when you're a card player, there's, other players have tails and clues of, whether what their hand might be or tipping their hand or if they're bluffing or whatever. And the market's very similar to that. The tails are here. Notice everything in the blue is the overnight part. From this line here to where it turns white, that's the overnight portion of the market. The regular session opens at 8:30, so that's right here where it turns white. And everything in the white here is the regular session. And actually, I just have it where it turns blue again at 2 o'clock. And I know that's my cutoff period. I don't trade after 2 o'clock. So, but if prices are going, still trading into the regular session and they're still inside the high and low of the overnight, it's probably a range day. And when you see it going up and down, and not going anywhere, and it's especially when it's swinging above and below the EMA. Look how it's swinging above and below constantly. Look how flat the EMA has gotten. That's how you know it's a range day. But more than anything, it starts to turn at the same spots every time. You didn't really know. I mean, you saw the support off the lows pretty quick, but you really didn't start to get the resistance until 9 o'clock. But by 9 o'clock, when it turned down from this level, turned down once, twice, 3, 4, 5, 6 times at the same price level in there, then that's, even if it's not a range, that's strong resistance, and that's where you want to. Every time it comes up there, it turns down. Then you want to, next time it comes up and you get a setup, you want to go short. Same thing down here. Every time it bounces, it starts bouncing over and over and over. Then you start looking for longs down here. So in this case, the only time you really weren't still looking for a high or low, and generally you're always better off to take a lower high or a higher low off the low side, lower high off the high side, or a double top or a double test rule or something like that. And same thing down here. And notice that you only got one of those. I really treated this like a double bottom. You got a double bottom here, and then here you didn't really have a good signal bar anyway, but you would have got burnt there. Here you got a second entry. But you'd be better off to wait on the higher low, and that doesn't come till here, and you don't want to go long right into that, right into the EMA, so that keeps you out of that. So you're better off to always wait on a higher low off the lows or a lower high off the highs. So that's enough about that. Let's get over to the trades, and I'm going to wrap the day up. But notice we're working down. We get the break. And again, this is not a very good signal bar. But what I would recommend here is when it broke lower, wait for it to break lower, and then maybe drop a limit order back here and see if it'll come back. And it would, even if it didn't come back on this bar or the very one that you entered on, it came back here and it still went back down. And you got just enough for your trade. Makes a double bottom, then it comes back and makes a higher low. There's your higher low, and look how bullish that bar is. That's perfect. Go long one tick above that. And that was an easy scalp. And honestly, I really thought it would go all the way to the other high. It didn't. Turns out there's a midline in here and it couldn't get through that really. Actually, it pushed through it and then it turns back down. And this is where you got to be really good to switch gears that quickly. Notice what happens. You got a double bottom, so that's like a new low, and you pull back first entry, and then you pull back second entry. So you get a second entry short there when you still haven't had a new low. So you're looking for prices to maybe try one more push down. But this is just a short trap. They trapped everybody, and they got a quick scalp, and then it ran back down. And they probably trapped a lot of longs right there that don't know to scalp out and exit, and turns back down. So there's a second entry short there. You're still thinking prices. Really, at this point, I thought they were going higher, but then you got to assume, hey, we're turning back down. Maybe we're still going to test that bottom on a second entry. It's not a very good setup, and that's why it's green, but, you know, it still fits the rules for a short, so I marked it. And then you're working down. And where do you bounce right off the overnight? First entry, pulls back, gives you a second entry long with a nice bullish bar bouncing right off that same low. Just go long right there. And you might get lucky and catch the low of the day here, because that's the low of the day. And doesn't happen, but it's still a nice move. And there's actually, you could have a long right here that you could have considered. Um, it's a first entry. It is off that trend line, and it does close inside of it. But it's so close to that high. The high was really here, but notice that high right there. There's not a lot of room. It would have worked. You know, you could argue for it to be green, but I think you're better off to skip that. And then you push through and you pull back, and then you get um, really a double, triple bottom right there and a nice bullish bar. And that was the better trade. And then you work up, and notice that's a new low. It's lower in that swing. You get a first entry when it broke below that one. You really could have gone short even right there because it made a double top. But then it comes back and makes that little double test and gives you a second entry short counting off the low. And so you definitely want to enter there, but you really, I mean, really that one should be marked too. You could enter in either one of them. But generally, I mean, that's really a double top, but I like to see a lower high, and that's the reason I was a little bit leery of that one. But there's still, a double top is just as good. It's the same thing almost, so I'm going to mark them both. And then, of course, it pushes down, pushes straight on through the EMA, pulls back, and then it pulls back again, and it makes another high at that same place. That's like a double, triple test of that high. Real bearish bar. Go short right there. It's obvious now that this is resistance up here. And look how many times prices have either closed or turned down from that level. That's a good sign, and that's why you go short there. And if this was spread out way down here, I'd probably say wait on a lower high. But, you know, you've tested it so many times right in a row there. And then it pushes down, makes a lower low, comes back and makes a lower high on a second entry short. Notice that new low, first entry, pull back second entry. And it actually went higher there. This is a nice trap. This is what you like to see. You see it go higher on a real bullish bar right there, and it turns instantly and goes right out the other side. Have you a stop, sell stop right there. And boom, quick, easy move. It bounces, makes a lower high. Go long above that. Your stop has to go below the double bottom because that's really the low bar right there. So that's where your stop needs to go. But I like going long there. And once again, I figured we'd probably either, if this line's going to be in play, we'd come back to there. At the very least, we'd come back up here. And this line right here is real close to this line. You can see that. And you'll see that happen sometimes. That you can, but generally you can take your trend line and just move it down and make it fit. And you can make that one fit, so it still fits there. But I drew it the way I like to see it go along the closes. And then I drug it up to here. But we shot through there. So I wasn't sure at that point. But it pulls back and it tests it again. It gives you that big bearish bar. Again, I'd let it break lower and probably put my limit order back where you would have originally gone short there, just to give yourself more room. And the fact that this didn't get down there, that concerns me a little bit. But notice how many times we tested that. Once, twice, three times, and then you get such a big bearish bar. We're probably going to push on through. Then it comes back. You get a second entry here. This is really your signal bar, and it's right back into that support. It's not a great signal bar. It's really bullish. So I'm not crazy about it. I did mark this one. But what you'd have to do here is you got to get in far enough back that you would exit before reaching this line. And if you can't do that, you probably need to skip it. It didn't matter in this case because it pushed on through, but it won't always do that. A lot of times it'll bounce right there. And so you got to be careful about getting long on such a big bar. You need to fit it within the 8-tick rule or the 2-point rule we follow. And you also need to get in with enough room to get out before you get to this critical line right here. Because, like I said, it won't always push through like that. but it does. So what you have here is you have a failed break below a possible trend range. You got a failed break below a trend line, and you're a good bit away from the EMA. But again, on this particular instance, I would wait on a higher low, which doesn't come to here, and then you don't have much room, so you really skip it. But it pushes on through, pulls back, tests the lower support, tests the EMA, gives you a nice bullish bar. Just put your buy stop right there, and you're probably going to get an overshoot equal to this at the very least over here. But you're probably going to here, and you may end up going all the way back up to the upper side of the range. And so that turns out to be a fairly easy trade. And I got you into the 2 o'clock hour. So, and you could have argued for going long down here. You would have got burned if you did that one. But when it turned right back up right here, if you got enough room to get out before here, that's exactly what I was talking about coming down. Notice how it touches the line and turns down. If you could let it break higher and drop and get in here with enough room to get out, maybe an extra tick or so just to be safe, then you could argue for going long right there. And like I said, down here you could argue for going long. But I just think in both of these, all three of these cases, you need to wait on a higher low, and you never really get that. You get one here, but look, it's right into the trend line. And so it's not worth risking it there. So that's really why those were not marked. But, this one maybe you could argue for it. So, and even this one maybe, if you got enough room before you get back to the EMA and the lower side of the range here. So, but even without those, there were several really good trades today. You're not going to get any runners really on a day. You probably could have caught a runner here and ridden this down a little ways, but I'd probably exit right here where the lows are. Somebody asked me about that today. Why don't I talk about exiting, where we exit more often? What you have to assume is that every trade we're taking, our only expectation is a scalp. But we try to get our runners on range days. I usually don't hold a lot of runners unless it's a failed break low or something, or a failed break higher, and I'm trying to catch the low or the high of the day. And just like here, if you'd caught this high, this right here, and you got a runner, well, that's the high of the day, so it might be worth it. But that's the only time I'm looking for a runner on a range day. I like them on a trend day. I'm always trying to catch a runner. Like the last couple of days, if you catch a runner or two, you can really rack up the profits. But yeah, the reason I don't talk about them so much is because they're more personality driven. I'm a scalper. I don't like to see money. Let's just say you move down here and you're bouncing down here and you got all this profit in here. But if you let this come back, you come all the way back and almost take your original profit back. You're almost back to zilch. And if that keeps going, then you had all that money in your can. I call it my can. You had all your money in your can, and then you took it back. And it did come back down in this case, and a lot of times it will, but I just cannot stand that. And so I know it's probably going to bounce here, so I'll take my money here and I'll look for another entry and start over again. That's my personality. But some people aren't as good at finding the entries, and when they get a good one, they want to hang on to it. So you can't really do that so much on a day like this. I think you're risking a whole lot if you try to hang on here. But if that's your personality, you're better off to try to get more runners or try to hang on more long term. So that's the reason I don't talk about a lot where to exit. Generally, I'm going to try to exit where my targets are, and on a range day, my target is the lows and the highs. So if I get in down here, I'm exiting when it gets up here, automatically on a limit order, and if I get in up here, I'm exiting probably automatically down here. Yeah, I might have missed this little move right here, but one time I missed a couple of extra points. Otherwise, I got out pretty much at the right spot every time. So, and look what would have happened on the bottom here. You wouldn't have got anything but scalps on most of these. So it wouldn't have done you any good to try to get any runners there. So keep that in mind. That's the reason I don't talk about it a lot, that part of it. Just assume that every trade we're trying to get a scalp. That's our key. And some of these trades are only designed to get no more than a scalp. And, so if you're trying to hang on to all of them, you're going to have a lot of disappointment. So um, what we're doing here in these trades we're talking about are designed for scalps. But you will get some runners. And as you get more experience, early on, if you try to pick and choose whether to keep a runner, you'll get it wrong every time. Every time you hold on to one, you'll get stopped out, and every time you don't hold on to one, you'll watch it take off, and you'll say, "Man, I should have had one." But as you get more experience and you start to understand when the best times to try to hold them are, like on trend days, or when you're trying to catch lower highs of the days on failed breakouts like this. See, this would have been the low of the day, and if you'd caught this last one here, that would have been the high of the day. So those are important ones. And occasionally you can catch those and really make some good moves. So keep that in mind. But yeah, I'm going to wrap it up. We're done for the week. We'll be back again and do it to Monday. Hope you have a good trading day tomorrow. Great weekend. And we'll see you next time. This is Mack with PriceActionTradingSystem.com.